Hello, I'm Greg Hunter, and everybody wants to know where the economy is going. And with me is John Williams from ShadowStats.com. And John looks at the future by taking a hard look at the past. He looks at where we're going by looking at where we've been. First of all, John, before you have any predictions about the economy, a little bit about who you are and what you do.
I've been a consulting economist for 25 years, Fortune 500 clients on down to individual investors. I forecast the economy, I analyze current statistics, what they tell you, and the accuracy of the current statistic.
Well, one of the things you do is M3, and I know people out there are probably looking, M3, what is that? It's folks, what that is how much money is out there. The aggregate amount of how much money is in the system, in all levels of the system. And what you're looking at with M3 is the growth of M3, because it's not backed by anything, backed by gold, it's not backed by anything.
This is the broadest measure of the money supply. Cash in the system, bank accounts, jumbo CDs, institutional money funds, and looking at the year-to-year change. How much has it changed since last year? Now, the funny thing about it is that back in March of 2006, the Federal Reserve stopped reporting M3. And it's the broadest measure. It's the best indicator that you have of inflation.
Why would they do that?
Well, they said it was too expensive, and it wasn't too meaningful.
Why do you think they did that?
I think they didn't want you to see what's happened.
What's happening? Let's take a look back here.
This is about where they stopped the reporting.
Back in March of 06?
Yes, and the orange line, which is M3, has just taken off. We're now over 15%, approaching 16%. The way this month is going, it could be well over 16%. And you have not seen that level of broad money growth. In fact, this will be the highest ever for the series. The last time you saw something like this was back in 1971 when Richard Nixon closed the gold window. We had terrible inflation after that, terrible economy. This foreshadows severe inflation ahead.
Now, most people will say, hey, they're growing money. Where's mine? I mean, that's a good thing. They're growing money. You say they're growing the money supply at a fast rate is not a good thing. It's a bad thing.
It's a bad thing.
Why?
The more money that's out there, the more rapid prices rise. The faster the pace of inflation. And what we're going to see now is that where inflation already is well beyond what most people are comfortable with. Most people are not making ends meet. You're going to see further inflation beyond what we've seen so far that's been driven by oil inflation. This is a monetary inflation.
So when you have this is basically a common share of USA Inc.
Right.
And when you make a lot of them, are you saying you dilute the shares? You
Absolutely.
Make them worth less?
The dollar becomes worth less.
Worth less, not worthless, but worth less.
It may eventually become worthless, but yes, worth less, two separate words.
You know, Ben Bernanke has been quoted in a speech in July of 2007 as saying that he worries about, and I don't know how the exact quote, but people's perception of inflation. Why is he doing that?
I think he believes that to a certain extent, and you'll see that what he's advertised in terms of inflation still being low, although the tone's beginning to change at the Fed, is that they go out and have found the lowest measure of inflation that they can find, core inflation, which takes out food and energy as though people don't consume food or drive cars, and food and energy prices are soaring.
So predictions, where are we going?
Where are we going? We have a severe recession ahead of us with even higher inflation than we're seeing now. It's going to be probably the worst business cycle seen since the Great Depression.
Are we going to have a depression?
I believe it will evolve into a depression. I think by the end of this next year, I wouldn't want to be. I wouldn't want to be the president in the 2012 election, because whoever wins this upcoming one is going to take blame for a real bad economy.
How do I protect myself?
How do you protect yourself?
You're a little guy. You got your $85,000, your 401k. You got your house mortgage.
It's a bad time for stocks. It's a bad time for bonds because of the higher inflation and what's going to be weakness in the dollar. That will tend to push the long-term rates higher, pressing down on bond prices.
Sell stocks.
Very simple. Cash. You want to be liquid. You want to be safe, and I'd hold a little bit of gold as a hedge against inflation.
John Williams, thank you very much.
My pleasure.